This is post-credit scenes. I know it seems as though I concluded a commentary, but I was really distracted earlier on, so I wanted to do it when I'm much more calmer and after I had gotten over my day. So for this portion of the presentation, which is the post credits anyways, I just want to take us to the chart and try to use all of the things we talked about in the presentation to define our trading model in the chart. Now all of this might seem as hindsight, but if you can go through this particular week and this particular week and also this particular week, in fact, if you can just go through the YouTube and revisit the commentaries, okay, you can see how we kind of like anticipated all of these price moves. Now, for the sake of this post credits, I'd like to just talk about 9th of December's weekly range and the 16th of December, and I would give this one as a bonus. Okay, so this is 9th of December's weekly range, and it's not of hindsight because we pretty much talked about the dollar index on that particular week when we let's make it obvious. All right, so this is the 9th of December's candle, and even from the short clip I played on the commentary, you saw how we discussed this week's price action on the XY. So let's return back to euro, and on the weekly time frame we see euro is bearish, and then we just go to the daily time frame. Now say this is the 9th of December. I'll have to delineate each days so that I can use the period separator on the daily time frame. It's not going to work, so that's why I have to use it here. All right, this is Monday 16th, and also I'm going to use it here, which is this is Monday, also 30th December. Of course, we qualified the Christmas week as low probability, so I'm not going to even talk about it at all. So now that we are looking at the euro even on daily time frame, we can see on this particular day, after we define our bias on dollar index as bullish, obviously we want to be expecting a down week for Europe. And look at how Monday traded. Monday traded in the direction of the high time frame bias. You can see we have a bearish close on Monday, so it means if we are going in on Tuesday, we are going in bearish, looking for a near-term imbalance for prices to trade into and deliver the rest of the weekly range, obviously to previous weekly low here. And you can see this is Thursday's trading, and as soon as Friday hit sell side here, previous weekly low, this is our sell side objective for a short-term trade, previous weekly low, and you can see how Friday delivered the opposing end of the weekly range. And in this particular week, the FOMC week, when we talked about DXY and all of that, I think this in the video I was talking about Thursdays. This is Thursday's high, and it's the midpoint of the trendline phantom, and I talked about how we want to see prices run through the midpoint of the trendline phantom. Now if you look closely on the close of Monday's trading, you can see Monday hasn't validated our bias, okay, because the market had not run into Thursday's high. So this is the portion where I was talking about you need to wait. Okay, this is where you want to wait for the market to validate your bias in price. Okay, you're going to use time through patience to allow the market validate your bias in time, and obviously you can see we have sell side here, our target, which prices haven't met yet. But of course, you can look at this healthy expansion into our sell side objective, which prices got very close to sell side, and dug very deep inside the bodies of this candle, the rejection block. Okay, now I didn't talk about, because we're still going to go in details with the rest of this time frame. All I'm just doing here is spending time on the daily chart, so that when we go into the 4-hour time frame where we will be executing, would have gotten a hang of what narrative is from the daily time frame. Okay, all right, so I'll leave that here, which is very important. And now I want you to look at something. Okay, I want you to look at something. The Christmas week, that was last week, you can see we had a small range week, which is what I call indecisive. And I have a personal model whereby if I see a candle like this not trading above or below the previous ranges, high or low, on the weekly chart, on the monthly time frame, on the daily chart, just depends. And I have a bias. For example, I'm bearish on euro, bullish on dollar, right? My expectation is to see the markets run for buy side first. Okay, if the market runs for the buy side, okay, I'm going to be anticipating Taurus soup. So primarily, when I was looking at time frame, the market over the weekend, okay, I was looking at how this week's candles likely to form, even if I didn't post a commentary, because I said I was only going to resume dropping charts and all of that from I think I said the 5th of January. Yeah, that's what I said, this particular Sunday. So you can see we have an inside bar. Markets not trading above, below previous high. And previously you can see what I was talking about, how just market trading below and closing below the low of the previous weeks or the previous candles range can just define buyers for you. Okay, merely looking at how the markets closed below the low of this candle, I'm still bearish. Okay, I'm still very much bearish. This is low probability week, okay, bank holiday, and it's indecisive. So ultimately I have a model presenting already to me. We have an indecisive week, we have a fair value gap here, and we have a weekly bearish order block. What's the weekly bearish order block? This last up candle here, prior to all of this down move, this is the order block. Okay, so intentions would be to see the market trade through this high, okay, and I want to see that happen, and then I'm going to trade in line with higher time frame buyers. So if we look at the daily time frame, okay, look at the daily time frame, you see how that exactly happened in Monday's trading. Okay, Monday ran through this high. And what's the weekly bias? Well, the weekly bias is bearish, and we can see Monday show sponsorship in the direction of the higher time frame bias. So what does it mean? It means that if you want to go in on a Tuesday, that was yesterday, you're going to be looking for near-term internal rate liquidity, and and that's how you want to take your trades. All right, so now we have this particular day where Monday formed the high of the week, and we have this day where Tuesday formed the high of the week, and we have this day where Monday formed the high of the week. Now think about it, all of these days when the high of the week is formed, you can see how it overlaps with narrative from the higher time frames. Okay, there has to be a blend between narrative on high time frame and price, and when that settles, okay, when those variables meet, or your narrative and and your higher time frame key level, when price meets those factors, and now the high of the week or the low of the week, depending on what the trend of the market is, that now forms the high of the week or the low of the week. It just depends. Now in this very case, if we look at EurUsd on the 4 time frame, if you look at EurUsd, you'd see that we ran buy side here on this particular day, that was a Friday, post non-farm payroll, markets ran buy side here and broke lower. Okay, and I recall in one of the commentaries I posted, I was looking at some level on dollar index. You can go through the commentary for the 9th of January of December, and I was talking about how some order block we're going to buy the order block on dollar index. And for the sake of those that didn't see the commentary, I was looking at this order block here. Yeah, if you can remember, I was looking at this order block here. So you can see how we had an expectation in price. I haven't talked about buyers markets coming from a discount, the previous weekly candles closure with respect to the prior range, and you can see how markets returning back into this discount on Monday New York session. Okay, so that's how you having a sound narrative that the market meets it in price, and the expectation is okay. Market, whenever there's a tourist soup, basically the market always follows with a reaccumulation to premium or a redistribution to premium for a run on buy side liquidity. Okay, so after a buy side liquidity run, after the tourist soup, markets runs to premium again. So if you measure from this low to this high, market is at premium here. Let's put it here from low here to high. You can see 61.8%. okay, market ran to premium. So it's a kind of like a pattern. Once prices run to the soup, there is always a reaccumulation or a redistribution to premium or discount. Now we're still talking about this one. So our setup here, which I called on the YouTube channel, was off of this this 4 hour or 2 hour bearish order blockers. There was a key level on the 4 hour as well, and look at what I told you. And after Monday delivered prices in the direction of the higher time frame bias, do you recall where this rectangle is from? Okay, you can see this is Tuesday's trading. Okay, if we go to the daily time frame on euro, if you go to daily time from euro, you can see there's a volume imbalance here, and I told you once prices displaces in the direction of the higher time frame bias, the algorithm seeks a near-term internal range liquidity to reprice and sets continuation for the continuation of the weekly range. So this is the imbalance on the daily time frame. If we transpose that on the 4 hour chart, you can see we have a fair value gap, we have an order block overlapping with this breaker and this daily volume imbalance. So your next setup, if you missed this one, is to trade off of this daily time frame or this 4 hour time frame fair value gap. Stops here because you are assuming that the Monday's trading has formed the high of the week, and you're expecting the markets to deliver prices for the rest of the week into the weekly sell side target. All right, so that being said, so what it's going to look like is if you want to go in for Monday, because I actually gave the call on the YouTube channel for Monday's trading and for short-term trade for the rest of the week, it will be like this. You have appropriate stop loss here, you're having appropriate stop loss here, you're going in on the 4 hour order block, right, and you're going to capture the bulk of the weekly range. Now if you have a sense of a higher time frame bias, okay, which is one of the things I was counseling about when I was talking about that was one of the things I was talking about in the commentary, that we could be poised to see the market, or the market could be poised to continue to expand, because we seem like the market is set up for a continuation in the direction of the higher time frame order flow. Okay, and it means if you could get your entries there early on, I mean, you could potentially capture 70%, closing 70%, and leave 30% on to capture the rest of this range, which is about 200 pips. okay, and you can only assume that it's a potential swing trade once you've gotten the context, and getting the context stems from you studying, the weekly time frame, the weekly chart, after the retracements, candlesticks, and just every single thing we always talk about. Okay, now on this particular week, we were talking about Thursday's high, which is the midpoint of this trend line phantom here, and you can see how the market ran into this high on Tuesday. This is Tuesday, although it reads Monday, but this is Tuesday because if you go to the daily time frame, you can see that it was Tuesday's candle that rated Thursday's high. All right, so now that being said, you can see we now have what markets run through this place lower, right? And now we have a bearish order block. And I said in a sell program, after the highest form, the market will seek what internal range liquidity. Okay, now on the 4-hour time frame, there's no fair value gap, but I'm pretty sure if you go through the 2-hour chart, you can see we have from this low here, from the high there to the low. If we measure it, look at what I said. After a Tory soup, the market follows it with a reaccumulation to premium. Okay, and you can see the reaccumulation to premium. You can see the 61% of the fib after a Tory soup. Tory soup, redistribution to premium. Tory soup, redistribution to premium. Okay, so that's a model on its own. So if you cannot get in, because the lesson is not teaching you to get in on the high of the week, it's teaching you that you can always find a setup, all right, after the high of the week has formed. And how do you know this is supposedly the high of the week? Well, you don't really know. You just have to trust yourself. Okay, and that's one of those tweets I wrote on my account recently, how I was admonishing myself to trust myself even more and more, because this particular trade here, I collapsed it on multiples of my own account and just left it in about just 2 accounts only, you understand? So it was quite painful because I would have had a robust December, happy and all of that, but it doesn't matter at all. So since you have the bias and you had an expectation in price, and the market displaced in the direction of the higher time frame bias, you don't have any choice but to trust in your analysis, so that when you're going in on Wednesday, you're going in with the sense of probability that the market has likely delivered the high of the week, and now you want to trade the bulk and the rest of the weekly range into weekly sell side objective. Now for this week, we can see here that Monday markets ran above previous weekly high, and we can see there was a shift in market structure. And what did I say about Tory soup? Tory soup follows with a redistribution to premium. So if you measure from this high to this low, you're looking for premium. You can see this is premium above 50% into 16.8%. Okay, this is premium. And how would you engage? You can see this order block, this bearish order block, and we have a breaker here, and this bearish order block, and you can, the daily range of the order block, you can see the low of the order block, the 50% on the bodies. You decide how you want to trade, but for me, I always go for the lowest hanging objective that price could easily fill my entries, because it's not really about precision. It's just about, I want to get in on setup and the market expand in the direction of my buyers. Okay, so you can see the same repeating pattern. Okay, what's the model? What does it look like? What's the half of the week front? Okay, and the daily time frame displaces in the direction of the high time frame buyers. Okay, you want to seek near-term internal liquidity, and you want to engage from there. Here, what are we looking at? We are looking at a reaccumulation or redistribution to premium. Why? Because it followed with the Tory soup. Here, what are we looking at on Monday? It's a redistribution to premium. On what range? This is Friday's range, and that's why Monday formed quickly the high. Okay, and that's why Monday is very, very tradable, because Friday already defined the dealing range in which Monday was going to trade into. But here you might not put a sell order here and probably put your stop loss here, because you want to be nimble, right? You want to be careful. But as soon as market validated your bias by running above this Thursday's high, displacing in direction of high time frame bias, now you're expecting a redistribution to premium into what? This candle. What did this candle do? Run buy side liquidity here. That's your bearish order block. And if we still go back here, you can see on Tuesday's setup is different from Monday's setup. Monday it's a redistribution to premium, but Tuesday you're looking for near-term imbalance, near-term internal liquidity, where the algo would reprice into before it delivers the rest of the weekly range. And here, what are you looking for? You're looking for a redistribution to premium. Why? You can see we ran buy side liquidity here, and the model says it follows with a redistribution to premium first before the algo begins to seek near-term internal liquidity. So if today wasn't New Year Day, bank holiday and holidays, I mean, trading off of this fair value gap would be high probability, in my opinion, okay, because we haven't met objective with respect to this price range. I think markets would return into sell side here. So I hope you found this one insightful. In the meantime, be safe.